Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, February 13th, the day before Valentine's Day. So get your presents ready and your reservations ready for tomorrow. We got just a couple economic news releases scheduled for today. We'll start off with the retail sales for the month of January. We had a 0.5% increase for the month of December, and we figured the forecast would be zero, and it came down a little bit. So pretty close to in line with expectation at 0.1%. Now, if you exclude the autos, the big ticket items, because they can obscure the numbers a little bit, we had a number in 0.3% up in December, and we figured 0.1%. And again, pretty close in line, somewhere in between, so slightly better than projections. Then we got the import price index for the month of January, and we had a decrease in the import price for 0.5% back in December. We figured it would kind of increase a little bit for 0.7, and it went up pretty close to forecast. So far, forecasts are relatively in the there hasn't been any huge surprise or anything. And then we got inventories for the month of December. We had a 0.3% growth in November. We figured it would be kind of tempered down a little bit, and again, forecast. So no big surprises today when it comes to economic news releases. Everything's pretty much in line. As for the stock market, it's kind of mixed today. The Dow and the S&P are both down. Nasdaq's up slightly a little bit. And we got the after effects of the State of the Union address. A lot of things are kind of affecting from the State of the Union address is a comment that was made where the president wants to increase that of the minimum wage from $7.25 to $9 going forward. So that kind of jitter made a few things like McDonald's, for example, stock because you get a lot of the people with minimum wage working there increasing, so it's going to raise. Basically, what that is, it's inflationary numbers there that that may hurt things a little bit. So trying to increase the wages. So we'll see how that's affecting the bond market, and of course they don't like it. So we're down about 30, almost 30 basis points, about 28 basis points since the close of yesterday. Primarily due to those comments, because the retail sales would have been good for the bond market because it's not so good for the equity markets, but because there's talk of possible inflation, that's the biggest worry about bonds, as what that means is that inflation erodes the value of those bonds. So that's why any comments about inflation or anything that maybe there might be inflation in there will kind of sink the bond market. So even though the stock market is coming down, so is the bond market because there's talk about possible inflation. So as a result, interest rates are up today as a result, and let's hope for a better day tomorrow. We do have opening gap here, so perhaps we can get that closed up tomorrow and get an improvement, or maybe later in the day, may be possible. But hopefully we have a 10-year Treasury auction today, so hopefully maybe that we have a good sale there that might improve the bond market a bit and hopefully close up that gap. But unfortunately today we have the rates have worsened a bit more today. As we can see, we've dropped quite a bit from mid-January all the way down here. So we're down to 102.94 all the way from about 104, almost 104, just above 104.50. So that's about over 1.5 points, right, or about 1.5 point, or almost 2 points right there. When you just shy of 2 points, so that's tells you where the pricing went. All right, just in a matter of approximately just under a month time frame. All right, folks, you guys have a wonderful day. We will see you guys tomorrow, and thanks for stopping by. Thanks for watching. And if you guys like to receive these email or these videos on an email basis, just stop by mikesdailymarketreport.com. Subscribe in the upper right hand corner. We don't share information, nor do we send you anything but these videos. Have a wonderful day.